Hello, hello. Okay. Okay. Good afternoon, everyone. And so we are going to do this very informally. My name is Mark Cousin. I am the executive director of the Reinventing Bretton Woods, and most of you have been attending over many years now the spring and the annual meeting where Reinventing Bretton Woods has been hosting different events with policymakers, market participants, international institutions from all over the world. And since we started this event, UBS has been one of our great supporters with Visa, the Center for Global Development, and the Frederick Ebert Foundations. And over the next 2 days, we will be covering a set of issues, global macro issues, the challenging that Europe is facing in terms of competitiveness, the issue of emerging market, to try to understand if emerging markets are now faring much better than it used to be before the different financial crises that they were dealing with in the 1990s and the early 2000s. But today we have also a set of sessions that are going to cover what is going to be maybe a game changer for global finance in general, technological changes, and also the future of money. So we have the pleasure, I think will be the second time that we are going to have a session on AI. We did one last October during the annual meeting in Marrakesh. And I'm very pleased that we were able also today to put together an interesting session on AI impact and in the financial landscape. And our chair today, Daniela Muhaj, who is the Inaugural Associate Director for Research and Technological Initiative at Georgetown, will chair the session and will introduce briefly the speakers, because you can find on the QR code and the program all the bio of the speakers. It will be here more deeper. Daniela, thank you very much for accepting to chair. I'm not an expert on AI. I'm more into the field of global macro, but global finance, but it's going to have more a big impact for the way we think about global finance. Last but not least, in terms of little publicity, because we are going to have other participants coming, just to let you know that Reinventing Bretton Woods has been initiating now a special series of events called Bretton Woods at 80. So it's going to be this year, the 80 years anniversary of the Bretton Woods Conference. And we all know there will be many maybe change happening in the Bretton Woods framework and also the way they are going to operate in the next decade. Today, the Central Bank of Austria just released one of the first publications for the conference we hosted last month. This conference will be followed by another event in China in May, one in July with the Central Bank of Peru, and in September, we hope that you can come and we'll all be invited in Kazakhstan, where we want to see also the perspective also from other emerging markets. And Timur has kindly accepted to support this initiative and a part of this publicity. And thank you again for joining and participating. And Daniela, over to you. And thank you very much again for joining us, please.
Thank you so much, Mark. I haven't used one of these in a while, so getting used to the mic. Well, good afternoon, everyone, and welcome to our panel. This will be no news to everyone, but artificial intelligence is fundamentally transforming many industries, and finance is no exception. It's driving efficiency and innovation, but it is also presenting challenges when it comes to adoption disparities and data privacy, among other things. Today, we'll explore how to maximize AI's benefits while addressing these risks, emphasizing the essential role of regulatory frameworks to create a balanced and equitable financial ecosystem. We'll discuss the recent AI advancements that redefine financial boundaries and the necessary oversight to manage these changes effectively. So we'll turn to our panelists today, who bring deep expertise and diverse insights into this dynamic field. So to my left is Kyle Hauptman. He serves as a vice chairman of the National Credit Union Administration, a position he has held since December 2020, after being nominated by the president and confirmed by the US Senate. His career before the NCUA includes roles as an economic policy advisor and staff director of the Senate Banking Committee's Subcommittee on Economic Policy. He was also a senior vice president at Jefferies & Co. and bond trader at Lehman Brothers. Additionally, Kyle has served as a voting... That's appropriate.
I crossed myself.
Additionally, Kyle has served as a voting member on the Securities and Exchange Commission's Advisory Committee on Small and Emerging Companies and has been a policy advisor for national political campaigns, including during a presidential transition team in 2016. Thank you for being here today, Kyle. And then to my right, we have Oliver Wuensch, who's a partner at Oliver Wyman and specializes in advising central banks and finance policymakers during pivotal financial transformations and crises. He began his career at a global investment bank and pivoted to public policy after earning his PhD in economics, and was particularly influenced by the great financial crisis. His tenure at the International Monetary Fund included leading significant reforms in European financial systems during the sovereign debt crisis, and Oliver's extensive experience in high-stakes multinational negotiations provides him with unique insights into the interplay between financial regulation and technologies like AI. And last but not least, Timur Turlov has over a decade of experience in international securities industry, beginning with his role as chairman of the board at JSC Nomad Finance in 2012, where he led business setup and client acquisition. He then advised at Freedom Finance JSC, focusing on strategic management and investor relations until 2017, when he became chairman of the board. Additionally, and interestingly, Timur also serves as president of Freedom Securities Trading in Belize and holds leadership roles in Kazakhstan's chess and football federations. He is also involved in multiple other enterprises, including as chairman of life insurance company Freedom Finance Insurance JSC, and is a member of the Young Presidents Organization in Kazakhstan. Welcome, everyone, and thank you for being part of this panel. So to open up the panel, I'd like each of you to briefly share how, based on your experiences and current roles, AI is shaping the finance landscape. And perhaps we can start with you, Kyle.
Sure. Just to review, my employer, NCUA, if you don't know, we are the insurer and regulator for America's 5,000 credit unions. If you know what the FDIC is for banks, we do the same thing. The only difference is our fund is about 21 billion and theirs is 10 times larger, but we are the insurer and regulator for credit unions. Navy Federal is the largest one, but sometimes people don't know what NCUA is. Super cool things on AI. As of this moment, we have not put out any guidance. We have not done a rulemaking. So our 3-member commission, tomorrow I'm going to vote. It's our monthly meeting. We vote on rules. And then guidance we put out doesn't have to be a rulemaking. I say that because the only products that our agency has, we don't make anything. We put words on a page. And that can be a rulemaking, that can be guidance. And then we can indicate our stance in other ways. Our common friend, Zhao Chen, who seems to know everybody, who worked at AWS, he was at a roundtable we had with incredible innovators, and we had it just a couple months ago. We had people from so I asked people, what is live right now? I wanted credit unions and vendors, for lack of a better word, right? Number one, lending decisions, right? Allocation of credit. We mentioned a financial crisis. I went down with the ship in 2008 with Lehman Brothers. I have a history of being around disasters. We'll get into it later, but no, you would get up and walk out if you do, believe me. But anyway, so better allocation of lending and automating the process. So the credit union can focus on the more complex ones, right? And off-the-shelf, boring mortgage. So better lending decisions, right? The reason I mentioned a financial crisis is because that, at its core, what was that? That was a misallocation of credit, right? Mortgages of too much to the wrong people in the wrong places. So better allocation of credit, lending. Another one, customer service. You've all seen this, and this means a bunch of things. Bots that are actually good and have useful information, really neat. Voice, now 24 hours a day, you can call and get real questions answered, and it's not just press 1 for this, do that. Really neat stuff. I'm not saying anything you guys haven't seen any for, but it's neat. Third, and then customer service in a human, where it can either look like an actual human, and if you didn't know any better, or sometimes they're using avatars. One credit union took their beloved former CEO, and it's that man's avatar is the person you speak to now to get questions answered. And what does that mean? One thing credit unions do, so they're either employer groups, the IMF, World Bank have a credit union, okay, American Airlines, Disney has a credit union for their employees. But the other big one is groups of people that are either religious or ethnic groups. There are 11 Ukrainian American credit unions, okay? You know what a big problem they have is? 40% of their calls are in Ukrainian or Russian. It's hard enough to find good customer service people to answer the phone. Now, you have to know English, Ukrainian, and Russian. AI has solved this, and it does it 24 hours a day. People are now serving communities, right? The one in South Florida, for people from Haiti, Haitian Creole, because nobody else in town gives you loan documents in Haitian Creole. It's the only place that you can answer, and they're actually going to speak to you in that language. That's what credit unions do, right? Serve subgroups. We have credit unions where everything's in Arabic, et cetera. The first credit union in America were Quebecois that came to New Hampshire. Anyway, so the language issue is what I'm trying to say. And I've seen demonstrations where they had a human on a screen who was a real live person, and they said a few sentences, and then hit a button, and they said it in Chinese, and then he said it with the exact facial movements, with the exact, right, you know, it's not like the bad overdub DVDs you used to get where the mouth was moving, you know, and it was a bad overdub. So absolutely amazing, and native speakers of those other languages, and they did Spanish, French, Chinese, there were a couple native speakers, and they said, if I didn't know any better, I would think that was a native speaker of the language. Meanwhile, the actual American who spoke did not know any of those languages, right? So that's neat. And then another one I would say is back office, drudgery. A lot of things that make running a bank or credit union boring. Account closures, or account closures because someone died, because that's a different procedure. Account opening, all of this stuff. And people can come in on Monday morning, you know, banks, credit unions almost never open on Sunday. And all of that stuff that came in over the weekend, I need to close my account, my mom passed away, I want to get this, is already done. So a lot of the drudgery. So I thought that was really neat. And then another one, last one I'll say, which we're looking into too, is anti-fraud. And I think that will be my agency's first use of AI. As of this moment, I can't really say we're using AI in any real sense, but I think the low-hanging fruit is anti-fraud. 4 of the 7 credit unions that collapsed last year, where we had to come in, like the FDIC did for Silicon Valley Bank, where we walk in, grab the keys, fire the management, and take it over, 4 of the 7 were because of fraud. And as you know, detecting fraud, it's like detecting cancer. Your survival rate depends a lot on how early you catch it. So anyway, I just wanted to run through those 4. One thing that's a lot better about AI in the federal government, and I want to say I'm an employee of the US federal government, so I look at these things very much from a how can America succeed, okay? And that's different about the last big thing of blockchain digital assets, is everybody in government thinks AI is cool. They know it can do bad things, but they can't say AI bad, because the NSA has been using AI forever to terrorist incidents to try to detect those. It reminds me more of the internet, where the internet did lots of terrible things. You never had an internet virus before you had the internet. Anyway, so I think that's going to be our, as an agency, use is anti-fraud. I think we're going to start there. And then maybe Q&A for our 700 examiners across the country who maybe want to call a colleague and ask a dumb question, but it's 10 p.m. or they're in Hawaii or Guam, and they can speak to each other, and then eventually an AI external. Sorry, this was a lot to start, but our agency will still give you wrong answers. It'll just be 24 hours a day now, okay?
That's great, Kyle. No, I really appreciate you giving a menu of options and also the perspective of where do credit unions come in and how they're thinking about, you know, this revolutionary technology in many ways. Maybe Timur, we can continue with you, and then Oliver.
I'll share a little bit my experience. We live and work in Central Asian region, and servicing at this moment we successfully built a US-listed public company with subsidiaries in Europe, in the United States, in Central Asia. And in Central Asia, we have most complex ecosystem, most complex finance ecosystem with different companies, with a bank, with a broker, with insurance and life insurance companies, with some lifestyle e-commerce services like airline tickets agency, Ticketmaster of Kazakhstan, the same kind of company. And we also in Kazakhstan has one of the most favorable framework to access different government databases. For example, from our banking application, from our banking super app, customer can access electronic documents. They can transfer ownership for car. They can take information about their real estate property ownership. And we also, as a bank with a customer permission, can help our customers to finance these transactions, to help them with the mortgages, to help them with the auto loans, to help them aggregate all information about their assets and help them to better manage these assets. On the other hand, we collected the quite unique data for our 5 million customers, and we have a lot of opportunities, even unlocked opportunities, to cross-sell our customers across these different business lines. But it also helps us to get a lot of different data for decision-making process. And on one hand, I think financial organization never had so much data to analyze for each customer, but we no need any human involvement to that process anymore. Even when we're making decision on consumer credit, on consumer mortgage, some auto loans, credit cards, we don't need any credit officers to review their files, their personal data. We can use these ML models, machine learning models, to analyze a lot of correlation between lifestyle, government, commercial databases, our insurance databases, our own credit history, and this National Credit Bureau database. And finally, to make sometimes very interesting correlation between this data. And I think the main fuel for AI is well-structured data. When you have a very well-structured data and you have an access to different sphere of life of your customer, how do they spend? How do they make their money? How do they manage their money? How can you collect some information about their business partners if they do some business? That helps you to sometimes to make a to achieve finally a really risk-based approach and really risk-based pricing for our customer. When we have some experience, for example, to make some scoring out of even traffic enforcement cameras, to be able to estimate insurance risk for each customer in Kazakhstan. Even if they never was an incident, but they're driving aggressively, they may have a high risk premium rather than if they're driving very accurately and also had no incidents before. And that's, of course, the fraud is a big thing in all emerging markets. And we also have a great experience analyzing so much data and finding sometimes some very unique correlation to also prevent fraud and to make a right estimation of probability of fraud transactions, which helps us to avoid some wrong application and disline some wrong application, but still to continue to approve application for people without who makes money every month, but for example, who don't have official employment, which is also quite common in our country. And analyzing so much of data, even if I think in Kazakhstan, we don't have so much computing power like in the United States. But on the other hand, we have so well-structured data that even our ML models no need such a lot of computing, no need such well-qualified data scientists. Because if you have a lot of well-identified customers and you have a lot of very trustworthy data, which you can rely on, even in smaller models, a less correlation, a less computing will be still enough to create some miracles. And once again, in my opinion, that can not hurt confidentiality, that can improve confidentiality, because even reviewing a lot of personal data, no any single person reviewing it. So just AI reviewing this data. And this AI can't talk to their colleagues, can't share this information with their family members, and so on and so on. And sometimes that's key, that helps us to keep a better data protection finally, just because no any single person really touched this data. And most of data leaks is happening because of humans. When we have ability to protect this data even from access of our employers, that helps us to finally better keep confidentiality and still to manage risk much better than any of our competitors, which finally create a huge market opportunities. And that's very funny. Now I think we coming to the world when the insurance companies and financial institutions, banks, now may even not understand well enough why they approving application, why they disliking application. And the most frequent answer to my questions why we dislike this application, because our ML model said that. So even our data scientists sometimes can't understand why ML models said not to approve. But ML models became such complex and they analyzing so much correlations that finally usually they do job much better than people. That's my experience.
Very interesting, and I already see some themes that will come back to, like this idea of data as fuel and data-driven decision making, but on the other hand, like trying to improve customer service and efficient allocation and avoid misallocation. So I'm very much looking to your opening thoughts as well, Oliver, and then we'll dive right into the questions.
Great, thank you. And also thank you to Mark for inviting me to this panel. I'm looking forward to contributing to the discussion here. So you asked me to focus on the regulatory and supervisory aspects of that question. I would like to talk about two things. The first one is when we look at the opportunities that AI, machine learning, and technology provides, how could supervisor or regulatory landscape benefit from it? But also, that's the second point I would like to talk about, given the increased use, as you just very elaborately explained, of technology and AI at the supervised institutions, at banks, insurance companies, and so on. What challenge does this pose to how you do regulation supervision? And perhaps let me start with the first one. And for those that are not perhaps too close to the regulatory community, if you look how banking supervision has been done for decades, essentially there's two things you're looking at. So the first one is there are quite elaborate rules, capital liquidity standards, where you get ratios and thresholds that you have to meet as a bank. And if you are getting close to these thresholds, warning lights pop up and you get very nasty calls. So perhaps at some point the FDIC or perhaps the association comes and closes you down. Of course, it's a bit more complicated than that, but this is what is been done. And I mean, we saw SVB last year. We had quite a big incident in Switzerland, where I'm coming from, and all these banks, at least at the beginning of the crisis, when you look at the thresholds, they were in the green. So they were attaining the targets for right and wrong reasons, but there was nothing to worry about it in the first place. And one of the reasons for that is that how this, if you look at how these frameworks are developed, how these thresholds are calculated, how these frameworks change after a crisis event, there is a risk that you always fight the last war. So you have whatever your subprime, things are changing, you have SVB, things are changing, but we have actually no clue what the next crisis is, except that we know at some point it will hit. So the second thing is, apart from the thresholds, supervisors do what is called on-site supervision or on-site inspections. So they go in force to the banks and start looking around, interviewing people, looking at documents, and so on. So that's also a very effective method. So how can AI help here? So first of all, on this fighting the last war, I think with the additional data that we have available, or that we can make available, because banks have, or financial markets have the data, and supervisors can leverage getting this data themselves, they can use AI and machine learning technologies to really identify the structural weaknesses by trying to piece together a picture that you are not able to see if you just look at one institution or at a very similar group of similar institutions, but you really need to understand the system as such. And if you look at the way that supervisors are organized, one of the biggest challenge is really getting this comprehensive picture, where it is required that several departments of your institute or your authority discuss with each other about the right things. And here, say, having models or a technology that using increased data availability, are able to identify links, that is a very big opportunity. But I have to say, we are still at the beginning of this. And the second thing, when we look at the on-site supervision, I mean, the old method of sending people to the bank and turning around each page is simply limited, resource constraint. You can only do this to a certain extent. And you need to identify a risk map or a list of priorities, what you are going to look at for the next year. So these authorities, they have kind of yearly plans, what they look at for on-site supervision. And here again, you might be fighting the last war. You might be missing the issue that is really the important one, because it got crowded out in this unstructured process by other priorities. And here, additional data availability is also an important thing. Let me perhaps, before I close this topic, say there's also a risk to this, and it is that the more data you give to the supervisor, the more the supervisor can identify, which is actually the purpose of it. But actually the bank could say, well, the supervisor has all the data, so why should I care? They will tell me when something is not going wrong. So the more empower the supervisor in terms of knowledge, you might have an implicit shift of responsibilities, which is not good. So this is something to balance. Now, second point, where is the risk from a supervisory perspective? And it is, and you just mentioned it, that perhaps the banks don't understand their models themselves. That is something. So if you have, for instance, an internal model on credit risk, that is already an issue. But if you look at the internal model for credit risk, only the biggest banks are able to do this. And now, if you look at the examples that we just got from the credit unions, the AI machine that talks to the clients, this is something even the smallest banks need. So this only works if the small banks are able to outsource certain activities to AI providers that have the staff, the investment, they can scale, they have the data and so on. So the bank might actually lose control over their own business because all the services that they need, all the skills they need to buy from somebody else because they are not able to develop and maintain this. Also because supervisors might want to approve it, and there is no chance that you get to this approval if you don't have the scale. So this is really a tricky issue for regulators. They are losing control of the supervised institutions because they are increasingly dependent on third parties that could be obscure, that could also be difficult to look into, and they are certainly not financial institutions that are regulated. So you are starting to regulate or supervise a shell. So that is one of the key risks.
Very interesting. Also appreciated you bringing up stress tests and vulnerability exercises in early warning systems, which makes me want to circle back to this idea of like data and using ML to make some of these processes and models more efficient and effective. And data is great, but data is not perfect. And while AI can also help solve some of these misallocation issues, some of these issues of making financial systems more robust, AI itself is not completely robust. There are risks to the way you design, develop, and deploy AI on its own. And even when it comes to data, yes, having it somewhere on a cloud or another system is safer than telling it to a family member or a friend who can tell someone else, or the human element, by way of simplifying things. But there are vulnerabilities to how you collect the data, how you process the data, how you store the data. So there are considerations there in terms of like handling the data responsibly, but there are also biases and flaws that are embedded in the data itself in terms of whether they capture in a representative way the constituents or the customers that you're trying to serve. So I'm curious, from each of your perspectives, how do you think about that, and what processes or checks do you put in place to make sure that the AI itself is being responsibly designed and deployed?
Start if you want. Next question, we'll start down there and come here. Is that fair? Listen, it reminds me of the White House statement, right? And it made me a little nervous. It said we want innovation and the opportunities, and then we want responsible development, okay? Newsflash, they're not gonna get it. The new technology is gonna be used by bad people the way every single new technology does. And then there are just negatives that are just economic dislocation. Industries come and they go. None of us got here on a horse today, right? When people say, I'm worried there's gonna be problems. Same with crypto. I'm worried there'll be issues. Now, I know there will be. I assure you there will be. Probably problems we can't think of. If you're worried, you should be. We don't need to run from that. This is true of any new technology. It's always 2 steps forward, 1 step back. Do you know there were 0 plane crashes before we had planes? No, thousands of years, we literally had none, right? And so as an American, I want it to be like the internet, and I want to be bipartisan. I'm a Republican nominee, but the Clinton administration did, in my opinion, one of the best things that's happened in my lifetime from an economic standpoint. 1997, Clinton Gore put out principles for this new thing called the internet. You can still Google it. It's really weird to read it, the language now, the information superhighway and all that. But anyway, number 1, the private sector shall lead, okay? This wasn't even a law. It was just put on whitehouse.gov, which had only existed for 2 years at that point, and it was a message from upon high. Now, and there was 5 principles. The first is the the private sector shall lead. And you're obviously using the internet because it's posted on your website, right? And there were government email addresses. That was the first White House where people had email. And you know what happened after that when they put those principles out from upon high, you know, to all the agencies? You know how this movie ends. America won the internet. We got all the negatives, everybody else. Remember, there were no internet viruses before we had the internet. There were no cyber attacks before this existed. But every country in the world has internet viruses, and it's bad. But only some countries have good paying jobs in antivirus software. Everybody has cyber attacks. Only some countries have good paying jobs in cybersecurity. Everywhere in the world, people are dying every day in car accidents. Only some countries have an auto industry. You're going to get the negative, and there's not a whole lot you can do about it. And bad guys will always use a new opportunity to scam. Not only is there economic dislocation, right? We always, all the things the internet did, right? All the jobs that are gone. You know, this country lost all of our video rental jobs. So did our neighbors in Canada and Mexico, okay? But only we got the headquarters, we got the jobs in the investment. Headquarters for Netflix, for Hulu, the early employees that had life-changing stock options, the investors that got in, the venture capital funds, the pension funds that invested in those. You're going to get the downside, and there's not anything you can do about it in the long run. It's like people, as a father, the people who want to shelter their kids from any harm, it's not only damaging, it is futile, absolutely futile. And now, granted, we say, listen, if it's great, you can now do documents in Albanian, and you can do customer service in Urdu or Pashtun, but we say, you're still responsible, you, the credit union, are still responsible for what that thing says. Your chatbot, your auto reply email, the documents you prepared for a loan in a different language, you, not the vendor, not the AI machine, you, credit union CEO and no other human on earth, are responsible for that. Now that was true of anything they produced. I don't know if we have to do that much right now, but I just think the concern of, well, we don't want the downside. Yeah, okay, I want world peace. I'm not gonna get that either. You're going to get all the negatives. The only question is, and again, I put my American hat on here. One thing we're very good at in this country is whether we invented it or not, we're good at monetizing it. We're good at having companies that employ and go public. We're very good at that. I don't care if we invented the internet or not. I know we got the most jobs from it. I'll take that all day. So, and I think we can do that with AI if we don't worry too much about the downside. Not because I don't think it's going to be downside. Boy, some of the deep fakes and impersonations, bad enough when somebody cloned your credit card. What about calling me in my voice and telling my assistant to wire some money? And it is my voice, and it passes a voice check. Sure, but just like antivirus software, I bet there's gonna be an industry of detecting those things, and somebody's gonna get paid. So you're gonna have the upside, you're gonna have the downside. What questions? It's 3 words, guys. Who gets paid? Who's going to get the benefit of this? And I just worry that we're going to be, as agencies, as the federal government as a whole, that we might put a kibosh on this thing when we could just let Americans do what they do very well, only because of our system, right? We're not better people, we're not smarter, we can't be. We're made up of people from all over the world. It's because the system normally allows it, and we crush it with the internet. Absolutely the most jobs, all the positives earlier. So great, Canada and Mexico can watch Netflix. That's only one of the 3 good things. That's the consumer use of it. That's cool. They can watch movies. They don't have to go to the video store anymore. But only we got the jobs and the investment. I feel the same about AI.
So I have to say, I agree with a lot of what you just said. And I think we need to keep in mind that implementing AI or using AI is not a binary thing. So it's not that we have a world before AI and then poof, and next day machines are taking all the decisions. So it is a process. We develop the ability to obtain data. We develop the ability to understand data. We develop these models step by step, and we just need to make sure that as we are on that path, we actually stay owner of this process, understand what is going on, understand the benefits, understand the drawbacks, and always supplement. And we would expect this in typical corporate governance to have checks and balances, to have second lines of defense, and so on. And you can't really outsource this everything to the machine. I mean, there was just the example that there could be a credit risk model that comes to results without really us understanding why this is the case. I mean, this is not acceptable. Imagine you are confronted, you're a board member of a credit union or a big bank, and you ask the chief risk officer, so what is your model? How do you decide whether you should enter an engagement or not? And that guy or that lady would tell you, well, this is my gut feeling, and my gut feeling has always been right. We would not accept this. Similar to that, we would not accept that this guy is not saying it's my gut feeling, but it's that black box. So really, along the way, we need to stay tuned. But there is also a societal component to this, and I mean, having this ability to challenge what the machine says also, well, requires you to have the ability, the willingness, and the knowledge to challenge it. And I think AI could actually, or technology could be detrimental here. Let me make an example. I just returned from the Middle East, and I took a cab from the airport to the hotel, and the cab driver has this meter, and the meter does not only show you how much money is due, but also it monitors the speed. And there's a GPS inside that measures the speed, but also if you are whatever 1 or 2 kilometers per hour too fast, the machine or this thing would say 2 kilometers too fast, slow down. If you exceed by 5 kilometers, you will get a fine, and so on. Now, if we live in a world where everything is like how fast you ride in your car, whether you cross the red light when you come here, if everything is essentially controlled and immediately sanctioned, including say insurance premium and so on, I think we remove the ability from people to take decisions, because everything is decided. Of course, I don't want to pay the fine. I don't want to lose my driver's license. I don't want to pay here and there. So you essentially develop a group of cattle. And this group of cattle is not the kind of people that you need in order to challenge an AI model or how a bank is run. And this not only, I mean, it's at all levels of the society. You can't have whatever 80% group of cattle and then think the 20% that are on top of the cattle, they still think, but it's really something societal. So we really need to, from a liberal country like Switzerland, we really need to make sure that people are still used to taking decisions, taking risks, being of course responsible for it, but not being remote controlled by the machine, because these remote controlled people, they are not going to supervise or to challenge what the machine is saying. So it's very much a societal issue.
Oh, thank you. The complexity, so AI helps us to sometimes to overcome some complexity challenges. We have a lot of data sources. We have a lot of data to analyze, and we need to make this decision very fast. So AI can help us with that. But when the complexity is continue to grow, and when all the competition is driving this complexity growth, that finally will continue to create the challenges for corporate America, not only America, to let management take responsibility for a lot of stuff which they actually never control. That's a big dilemma. Yes, we still need to carry this responsibility. We still need to be responsible. We're legally responsible for that. And every regulator wants us to be responsible. And of course we are responsible, but actually it's not yet means that we're fully in control. And that's also create some stress for management team because it's more and more things which actually is your direct responsibility, but not your direct control. On another hand, I think the only way, and we see that also from a lot of regulators across the globe and also in the United States, that even Security Exchange Commission is require corporates to be as transparent as possible about any cybersecurity incidents, about how do they processing and storing this data. And that's, I think, helps corporations to pay more attention to this cybersecurity because the one thing, if some incident happens and nobody knows about that, and the other thing, if it will, you have to be obligated to disclose that you had any minor incidents. And to avoid your reputational risk, you're trying to apply as much efforts as you can to really make sure that you do everything possible, everything in line with regulation to provide the highest level of cybersecurity, which as any kind of security never will be 100%. But still this transparency in cybersecurity, transparency in disclosures is is the same important like in financials, in any other kind of disclosures. And I hope that finally this this disclosures policy will help us finally to find the right compromise. I hope that also AI will help us to better, maybe in a second stage, to let AI to explain better how the AI itself make decision. Of course, to let us still be able to manage all the key logic. And of course, any data scientist understands the main logic, how AI should think. Sometimes this decision-making process could be such complex that it will be very difficult to explain to senior management team, for example. Because if you're analyzing a lot of like tens of different variables to make decision, it's not such simple like that's hard stop if you have a bad credit score, so we not give you a credit. And what's the credit score? Credit score is also a complex thing, but not such complex like the current ML models, analyzing so much data about your utility bills, about your friends, about your social media, about so much different factors, depending on what color of your car you drive. Sometimes it also can slightly affect credit score, something like that, because of some correlation and because the people who love, I don't know, red color of your car is driving more aggressively. Maybe, I don't know. So, thank you.
Yeah, very interesting thoughts. I'd like to start this next question with you, Oliver, because the 2007-2008 financial crisis was an important event that upended the world, the financial sector, but an important marker for your own career as well. So it's not that AI is coming into a vacuum. There was already a lot being done in the financial sector to respond to shocks, again, from the financial crisis. That was a big turn, but also from the recent COVID pandemic. So in light of these events, how has the emergence of AI influenced the sector's outlook? And then how are regulators and policymakers adjusting their views of the future direction of financial reform, both at the local and global level? And what is the role of international cooperation? Who's leading or who will lead the charge? Like, there's a lot of heterogeneity across sectors, across countries. So where were we going and where are we going? Is that direction any different with AI in the equation?
So I'm just wondering what would have happened if you had put this question into ChatGPT. If we start,
I will after the talk.
we can try. It would be very interesting. let's perhaps look at, start with 2007, 2008. I think at that time, you're absolutely right. We didn't have artificial intelligence. I would also think that at that time, at least at certain banks, human intelligence was lacking. But there is, say, one thing that I think has been triggered by that very crisis that we are today benefiting from. And it very much goes into the camp of my very first answer on this panel. So one initiative that we started is that we tried to really map the interdependencies within the financial sector with real life and near-time data collection. So there was a working group that we had at the Financial Stability Board on data gaps, as it was called. And I remember the chairman of that group, which I was part of, he was at that time at the Dutch National Bank. He said it can't really be that. So we have a tool where we can see all the planes flying around in the world, our radar, right? But we don't really know how banks are interconnected to each other, through which channels, at which exposures, and so on. And based on that, what the Basel Committee and the FSB did is they introduced a so-called data hub, where banks on a name by name basis, it goes through the supervisors, but it comes straight from the banks, on a regular basis, report how they are interlinked to each other. And so this is an important initiative because it's one of the databases that you can use to actually analyze through AI and machine learning models, and this is also very actively done. And here, the benefit is not only that you see what kind of interlinkages you have today, but also you have a time series on what happened last week, the year before, and so on. And that helps really also to try to find out how exogenous shocks or structural changes actually impact these interlinkages. So it helps us to understand the financial system from a structural perspective much better. Another thing which is enabled by technology is stress testing. So stress testing you can do at a very top-down level, but many countries, including my own, Switzerland, we now ask banks to, on a monthly basis, for instance, report mortgages line by line. So anonymous, obviously, but line by line. So you see the borrower characteristics and so on. And there you can start also, you see behavioral changes, you see whether one bank is more aggressive than the other. And 20 years ago, we wouldn't have had the technology, not only to analyze it, but even to report and to collect this data. And one of the preconditions for doing this is, the last point that I would mention, is that today in the regulatory sphere, we put much more emphasis on asking banks to collect data in a structured way. So data becomes more comparable. And then obviously banks always complain, oh, this is regulatory red tape, it's effort, we need to invest in this. And one question that when I still was a supervisor, I asked banks, so look, if you don't even have this data yourself, how you're running your shop? Right? And you would actually see, and I saw this also when I then was dealing with a lot of bank restructurings from an investor perspective, that actually many banks, even the top management, doesn't really know what's going on, and they're only very filtered in a very high level way. And I think the technology asked us or pushed us into really remediating these things.
You guys remember a few weeks ago there was that earthquake, little one. It hit New York City. It was very minor. It didn't do any structural damage. If you remember 2011, there was one here. Very minor, didn't do any damage. Why did it freak people out? Why do people on the East Coast remember that one from 2011? It was a 5.0. If you lived in California or Japan, you wouldn't even think about it, right? Why did it freak them out? Why do they remember it so vividly? Because it was unusual and it was new. Okay, it's not to a Californian. AI is new, but it doesn't mean it's more dangerous because we're not familiar with it. I understand our species, like most species, things that are new we're more wary of. but it doesn't mean the negative is actually worse because it's a new negative. Did you all see the video of Elon Musk in Arizona? His self-driving car hit a guy. It was the middle of the night video, and they shut it down, okay? It's a guy on his bike, and as usual, I think it was the cyclist's fault in the accident. And they shut it down in the middle of the night, and I was like, wow, if that's your problem, that's a good problem. And yes, a person was killed. Do you know what else happened that week? Just in this country, over 1,000 people were killed, right? If you think machines are bad, you should try humans. And the machine at least doesn't get drunk. And so I guess my overall point here is it is our nature to get nervous about things that are new. AI is the earthquake in New York. It's actually not that damaging in New York. It was different for them. They're not used to it. It doesn't mean it's actually damaging. The earthquake didn't do anything, but it mentally makes people worried. That car accident that shut down that self-driving car in Arizona, I mean, it is amazing. People are analyzing that video and rewinding it like it's the Kennedy assassination video. And I was like, you got plenty of videos of cars killing people all over the place. And the same way, rideshare, Uber and Lyft, right? One of the arguments they make when they're going to get kicked out of a city is they can show that drunk driving deaths drop. And it's true. They have the data. The police would tell you this. They drop because humans are humans and they drive when they shouldn't. Well, it still requires a person to be in the car, though, and it's still a human, right? To not have, because of this video of a cyclist who should not have jumped in the middle of the night in the middle of his car, we're now going to have more deaths, I would say. I'm not here to promote Tesla's car or anybody else's, but that's what I worry about, that because of the new danger, because of the earthquake in New York, we're going to have way worse problems because the self-driving car doesn't get drunk. It doesn't text while it's driving. It has other problems, sure. But I worry, again, this is my American policymaker hat here, that we're going to lose because of the new thing and have worse problems, but we're going to live with that trade. I hope we don't do this, but we're going to live with that trade because we prefer the big old problems to the new smaller ones, right? And awful things are going to happen with AI, not only economic dislocation, but the bad guys are going to use it because the bad guys use every technology. And there'll be parts of the world that are havens, the same way some parts of the world are havens for cybercrime and scamming you to send money. But people have asked us at our agency, are we going to have a white list of vendors? It's a term we use. Like these are approved, and I don't know, maybe someday. We don't do it for blockchain, crypto. I don't want to. I'll just give you my view because this experimenting needs to be done, and I also don't want to take any bit of responsibility off the person that runs that credit union. They and they alone are responsible. And the moment I start saying, no, you can't use these tools, we can only use these, well, now it's a lot harder to hold you responsible when I've taken away. And there's going to be experimentation. And we know that the one way to have an absolute disaster is to try to stop innovation. It'll be a train wreck. It may be a familiar one, and I think a lot of people, and especially policymakers, prefer the known, comfortable disaster that they understand to the new one, to the earthquake in New York, to that cyclist that got hit on the same day that there were thousands of other deaths from that. Anyway, that's just my general shtick on that.
Great. So in the interest of time, I will do one last rapid fire. Typically, moderators give the panelists one word. I'll be generous. I'll give you one sentence. But let's say we are in a world where we have successfully mitigated and managed the risks with AI, and we've kept our eyes on where the opportunities are and how do we maximize those. What does success look like from your perspective? And Timur, sorry, I'll put you on the spot for this one. We'll start over there.
I hope that success is growing efficiency of industries. I mean, we need less people solve problems and unlock a lot of human potential to be focused on more creative tasks. And I believe that the financial sector is still too big, for example. It's definitely no need such human energy and resources to facilitate finance in our country.
Good. So I think given the current and even in the future even more growing importance of AI, we need to make sure that we don't undermine competition. So it shouldn't have an anti-competitive effect. And this obviously depends on, say, competition between companies, industries like, for instance, banking and the technology companies, which is quite a tricky one. But also we need to make sure that we don't have dominance by certain or few jurisdictions. Not putting a name on it because it's relevant, but we need to make sure that there is a certain balance and competition.
If you only gave me one word, it would be upside, meaning the negative is going to happen anyway, and you can delay it. The countries that her policies didn't allow for a thriving, homegrown, let's call it internet industry, we used to call it .com industry. Well, guess what? They're eventually going to use the internet, and they're going to get all the negatives anyway. They're going to have cyber attacks, and they're going to have viruses. But because you did not allow your country to succeed and build this new industry and have experts and entrepreneurs in your country, you're still going to get the negatives, but you're going to wind up paying an American company for antivirus software or cybersecurity. So that's not a good trade. Someone out there is going to make a lot of money helping mitigate the effects of AI. We haven't done a damn thing to remove or reduce internet viruses, cyber attacks. They're probably worse now than ever, and they always get worse and more complex. We haven't done a damn thing to stop that. Not much. But what we do have is well-paid people and investors doing well and employees doing well in trying to mitigate those things, i.e. cybersecurity, that sort of thing. People are going to make money on the negatives of AI, and you're going to get the negatives anyway. You might as well get the positive. We're going to need tools to protect us when somebody calls you on Zoom and it's literally their face and their voice, right? That's a new problem. The same way the internet created brand new problems we never had when I was born. Didn't even exist. So anyway, that's my thing. Grab the upside, because I think the downside is inevitable. But people are going to make very good livings helping us mitigate those negatives.
Great. Well, thank you so much all for your insights. We'll open it up to questions from the audience. So please go ahead. Any questions you have for the panelists, we welcome them at this point. Yes, please. And do introduce yourself as well.
I think it's very interesting. Can everybody hear me? Oh, okay. Thanks. I think it's very interesting to hear Kyle's and Oliver's comments. I think you were talking about probably slightly two different things, and you've both made very good points. And I see it a little bit as an analog to one, free trade. It's good, but there are losers. And if you don't manage the losers, the consequences are dire, or could be dire. And then the second one perhaps is nuclear energy. Goes to your example of a bad accident, creates a backlash against industry, which is probably the cleanest, greenest we have. So how do you deal with perhaps mitigating risks of AI so that we can have a thriving industry without those dire downsides? Thank you.
Shall I try to? So I think it's 2 points that I would have in mind, and it's certainly not the only one. So the first one relates to this competition aspect. So as long as there is choice, different competing AI providers, I think we can mitigate the impact if one, for whatever reason, could be intentional or unintentional, messes up. So that's really the point, that we need to make sure that we don't have monopolistic or oligopolistic behaviors here. The second thing is a bit broader, and it's about the social impact of AI. We hear a lot that a lot of jobs are going to be displaced and so on. And then you have scientists that say, well, if you look at the technological development in the past, from the steam machine to other things, it always created more jobs. So I think on aggregate, we shouldn't be too worried. But the problem is that actually labor market mobility in terms of skills in our economies is very, very low. So this means you might lose your job, you get a new one, but this doesn't help you because you're now unemployed, and you're happy for your neighbor, but it doesn't help you. So I think we need to think about how we actually manage this process, and how we can make sure that there is, even if there is in the long term more employment or more interesting jobs, also that nobody gets lost on the way, because getting lost on the way will first of all increase resentment. It might also increase political instability, but it also will incentivize regulatory moves. And if you look, for instance, at the AI regulation in the EU, I think in the EU is now the first jurisdiction that has a comprehensive AI regulation, but they don't have an AI industry. Yeah. And for the US, it's perhaps the other way around. So, and this is driven by, say, an extremely risk-averse approach, but also because politicians, they don't want to see, and because they are not able to manage the instability that too much AI usage could lead to. And I think we are pretty much at the beginning of this debate, not at the end.
Funny you mentioned nuclear. Remember I said I was at Lehman when they collapsed. I have a history of being around disasters. March 2011, working in Tokyo, if you guys remember, there was a gigantic earthquake, and then it set off a tsunami, which melted down the Fukushima Daiichi nuclear plant, okay? And it was interesting. The Wall Street Journal even had articles. Among the Westerners who were there, okay, how nervous they were, and people left town. I know people who lost their jobs, and they said, you got to come back. And they said, no, I'm scared because, and listen, it was a frightening time, right? Every day the news got worse. And it was interesting to notice there was a pattern to how nervous people were, how willing they were to say, I'm out of here, I'm not coming back to this island. It was Chernobyl. Americans and Canadians generally were a little more lackadaisical about it, like fewer of them left. Europeans in general left town quicker, and the further east you're from, and I think it's because the new thing, nuclear power, their memory of it was this awful accident, Chernobyl, which was probably the worst one there's ever been. Now, their risk assessment, having been close to that awful thing of a new technology, nuclear power was relatively new, we may have been too lackadaisical because we didn't have anything that bad here. But it was just, my point is, people's early experience with this, you couldn't not notice it affected. The people who their parents grew up talking about Chernobyl, they were out of town. And maybe they were right to. I would say that demand creates its own supply, meaning this incredible innovative world that's going to make all these amazing things that are terrific. I think medicine is going to be amazing, right? Just the benefit, life-saving technology, everything, driverless car. Even our lives are going to get so much better in so many ways. It's amazing. Ian Fleming, who wrote the James Bond books, he died many years ago, so there's never going to be another one. There are people who are making. My wife got a Harry Potter book. She had to create it. There's no actual new Harry Potter book. It's absolutely amazing. But I think that this same power of innovation that's going to create scary things, but also awesome things. The way none of us ever want to go back to booking travel before the internet. If you're old enough to remember, it was so time-consuming, it was a pain, right? I think that there will be, let's call it mitigation tools, okay? I keep using the same example, but akin to antivirus software, right? Cars cause accidents, but there's a market for safety equipment. They are a lot better than they used to be. We have mitigated that. So I think what I worry about is some early Chernobyl-style scarring incidents that are going to stay with you, kind of like that car accident with the Tesla, which I think that model of car would be a lot safer than us driving. And I think because of that accident, we're going to have more deaths, not fewer. And I worry about that's the equivalent of sort of a Chernobyl, a searing experience that says bad, and then may lead to a backlash, a political one, a regulatory one, But again, I still think there's a lot of money to be made in the mitigation part of it. Someone's going to do voice detection or something like that better, document. People are going to go to court and say, oh, we have evidence for, here's the suspect video footage, and you're not going to know anymore if it's really them. Here's a photograph, you know, in courts and convicting people, you know. Here's a recording of your phone call. Really? The call may actually happened, and it was your voice, but it wasn't you. So there's going to have, I mean, it's incredible things, and probably many that at least I can't even think of right now. But there's going to be people, as long as those are problems and we allow innovation, that same innovation should provide for, let's call it safety equipment and tools and that sort of thing. That's my hope, right? I can't prove that in any way.
Great. We'll take one last round of questions and before we wrap this up. Please go ahead.
I have a question which is a little bit broader about more the policy side of the financial service industry, particularly central banks. Let's say the regulators. I heard about the regulators, but I was wondering, does AI also have a broader impact in the way, for instance, central banks does monetary policy or financial stability is mentioned, but particularly about monetary policy seems to me an interesting area, particularly when you think also about CDBC and the whole evolution that we're seeing in digitization.
Great. And we'll take a couple more questions if there are any. Okay, then we'll address that question.
Okay, so let me talk about the monopole side of things. I remember when I did my economic studies in the 90s, we had these new things like DSG models and VAR models and so on. If you did macroeconomics in the 70s, I think nobody knew about this, so people were applying the Taylor rule. I think AI and technology and data in particular allows us to really make the next step in terms of model development and being able to, say, improve the models, try to reduce the imperfection that the current models have to allow us to make better forecasts, to better understand the structure of the economy, is the behavior of people and so on in economic agents, understanding of transmission channels. That is going to improve the basis that we make decisions on. Let me perhaps stop here for this first part of your question.
And I also want to add some, because in my opinion, these developments of AI can contribute to emerging markets even more than for developed, because developed markets has definitely better models and definitely better data, and maybe even better experience applying these models rather than developing markets. And I hope that this now in a modern world when the data collection is much better everywhere, so these approaches can improve the function of emerging of central banks of emerging countries even more efficient than in developed markets.
Great. Well, we'll wrap it up. Thank you so much, Oliver, Timur, and Kyle. I'm certainly walking away with a lot more knowledge than I had walking into this panel, so I will call that successful. Thank you very much to each one of you for being here today and for engaging. Enjoy the rest of the DC Festival and the ongoing IMF World Bank meetings.
Thank you, Daniela.
Thank you.